Hey everyone, welcome back to Upside Down Data. Today I want to talk about Chainlink, some thoughts I have about how Link will behave in this bear market and coming out of this bear market, and then take a look at some of the models that we have here on the channel to see what they make of Link's price action. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates about indicators and more over there. So Link in the last few months has actually been extremely boring, right? We've basically just been going flat, just sideways in a range ever since this really nasty drawdown that Link saw, really ever since the spring of 2021. So Link, you can kind of think about it as having had two phases. One just pretty much straight up bull market with a bunch of volatility inside, leading into one bear market, which we're now in the middle of. Now, the first thing I want to talk about with Link that I find interesting about its current price action is that Link has actually been appreciating overall ever since the lows back here in June, and at least has been setting in daily closes that are above that. Whereas Bitcoin, oftentimes seen as the barometer of in the crypto space of what's going on, has actually not seen that. Bitcoin's actually been setting in closes more recently that are lower than the closes it was putting back in June. So that's one sign of relative strength that we've talked about in the past. That Link has held up relatively well, even though it's just going flat, because it's not going down, right? It going flat is better than all these other assets which actually have been going down during this time. But that's just kind of a short-term observation. What I want to flip to now is kind of a zooming out a little bit and just thinking about where is Link situated in the broader crypto space, and what kind of confidence can we glean based on its fundamental values, fundamental situation. So to start us off, I want to talk about what I think everyone's greatest fear is with any altcoin, or really any asset in general, and that's that it's going to just slowly die off. It'll never get back to its previous all-time high. So anyone who would have acquired an asset like Link, for example, up here in, let's say, this range here in the $20 or throughout here, is just going to be left holding a bag that will never ever be worth that same amount again, and it will be a loss. It will be a losing investment in the long run. And certainly if we just go back into the history of crypto, we see some examples of that. So I'm going to show you here, this is a snapshot on CoinMarketCap from the beginning of January 2018. So this was around the time when a lot of altcoins in this bull market were going absolutely parabolic. You can see this over here on the 7-day change. That's this column here. See coins that have run 300%, 77%, etc. in the last week. Just everything going absolutely nuts. When you look at the names over here, some of them are familiar, but a lot of them aren't. A lot of these names you may have not really seen much before. I mean, obviously, if you're around then, you might recognize them. But more recently, no one's really talking about these. And then if we just look at some examples, so I'm going to pick on Bitcoin, no mean for offense. I'm not trying to call out Bitcoin investors if you're still bullish on it. But just looking at some charts of some of these assets, I think this is what a lot of people are afraid of. So this is the Bitcoin chart coming throughout to the current time, and you can see this big rally in 2018, and then more or less nothing since. A little kind of blips and a little bit of volatility back here in 2021, but more or less just nothing. Just an asset that looks like it's just slowly bleeding out. The slow death. Another one, which was number 42 back then in 2018, was Dragon Chain, another asset that you probably haven't really heard much about more recently. And again, except for a little blip of volatility back in 21, it had its heyday back in 2018, and then basically just bleeding out slowly, not really a whole lot going on. Basically a dying investment, probably one that is never going to see all-time highs again. Again, not trying to call you out if you're a Dragon Chain bull, but the chart is the chart. Looking at this, it's very hard to believe that suddenly this is going to go ripping and break its previous all-time high it set all the way back then. So that's what I think a lot of people are worried about, right? And with Chainlink, maybe people have that same fear. With Link starting to go in this brutal downtrend, not being able to put in a new all-time high in this, in November of 21, when a lot of other assets were putting in new all-time highs, Bitcoin included, you might say, oh, well, is that just a really negative sign? Does that mean that Link is going to slowly bleed out like all those other altcoins we've seen this happen to already? Well, there's a big difference between Chainlink and a lot of other altcoins, and that is its fundamental value to the broader crypto space. Chainlink is an oracle, which means that it provides data to a lot of other apps, a lot of other chains and applications that are on those other chains. And the thing that really differentiates Chainlink in some ways is that not only is it an oracle, in some ways it is the oracle. And we can see this just here on CoinMarketCap. Just by taking a look at the oracle category, you can see that Chainlink is at 3.3 billion, well off of its all-time high. But you compare that to the runner-up, it's still massively bigger. The market cap of Chainlink dwarfs basically any other oracle chain that's out there. Really, none of them you can even hold a candle to Chainlink. And we can see this also just with the adoption. So here I am on the Chainlink official website, just looking at the ecosystem. You can see that Link is integrated with thousands of different applications across many, many, many different blockchains. And so, not only is Link just larger in market cap, it's also much larger than any of these other oracles in terms of adoption. And so what that means is that Link has situated itself as being kind of the lifeblood of a lot of these applications, right? DeFi being a big one, but also NFTs, gaming, etc. Link has become one of the key utilities in the crypto space, is the lifeblood of a lot of these different chains, that people are relying on Chainlink to provide this outside data that's needed for the functioning of these DeFi protocols, these gaming protocols, these NFT protocols, etc., etc., etc. So if someone thinks that Web3 as a whole, because that's really what we're talking about here, Chainlink has kind of integrated itself as being one of the cornerstones of Web3. If someone thinks that Web3 is going to ultimately succeed, then that means that one probably also needs to think that Chainlink's going to succeed. We've talked about this before. It's one of the things that's kind of special about Link relative to a lot of the other assets we talk about. Because when we talk about a layer 1 blockchain like Ethereum, Avalanche, etc., we talk about those as being utilities in and of themselves. They allow building on top of them. But there's so much competition in that space. It's not even clear if Ethereum is necessarily going to hold the crown. A lot of people think it will. Some people think that's ultimately going to fall to one of the rivals. It's not really clear with any of those L1s which ones might be able to stand the test of time and which ones may or may not have already put in their all-time high that they'll never be able to break. I think with Link, we know that if Web3 succeeds, Link probably will succeed as well, which might give us more confidence that this all-time high we saw back here in the spring of 21 won't hold up if Web3 were to have another big explosion in a future bull market. Whereas we don't know if every single layer 1 would still be around to do that, for example, as a comparison. And so really then the question that we have to be asking is, I'm going back to a historical snapshot here from May of 21, around about where Chainlink put its all-time high in price and then therefore its market cap. Really, if you're going to be like long-term bearish on Link, you'd have to think that it'll never be worth more than 21 billion to provide the services it provides to Web3. And so what you'd really be arguing then is that the top of Web3 was in the spring of 21 in some ways. That might be what you argue. And really that is actually kind of, in some ways, the way it was. DeFi had its top in the spring of 21, etc. So even though the crypto market cap got bigger, you might see the hype of Web3 being at its strongest in the spring of 21. But even going into, the fall of 21, you'd have to say that the 2021 in general was the top of Web3, and it'll be down only from then on out. To, in my opinion, think that this top of 21 billion will be the most that Chainlink, which provides the lifeblood of a lot of these, Web3 applications, that would be the peak valuation. Because I think if Web3 turns into what some people think it could be, where it's, managing trillions of dollars worth of assets, then for an Oracle service like Chainlink that's that important to it, for it to be capped at 21 billion seems a little bit unlikely. Now, again, that's very long-term speaking, so I don't want to, that, and also that's my opinion, so not financial advice, of course. And, who knows when we get back to that point when Web3 would really explode. There could be a lot more short-term pain in between that, or short to medium, even longer term before we ultimately see that move up. I think that's the thesis that one has to think about, is if you're overall bullish on Web3, it seems hard to me to not be bullish on Link long term. I mean, you could make the argument that if things drag out long enough, there's some other Oracle that could come out that could supplant Link. But so far, we haven't really seen any signs of that, and it's hard to see why that would happen. I think so many people trust Link as such a big early mover advantage that at the very least it's going to be in contention for a long time, I would expect, unless something really horrible happens, something really horrible were to break, which so far nothing's gone wrong. Hard to see, what that could be. All right, so if that's the case, then we also have to think about, why has Link been falling off at all? Well, I mean, obviously it's been falling off because we're in a bear market. The other thing about Link, and maybe part of the reason why it didn't reclaim all-time highs back in November of 21, is that up until this point, Link has had actually pretty limited utility to the average investor. Link is the currency by which node operators kind of settle monetary transactions. It's the payment vehicle in the Chainlink protocol. But unless you're actively interacting with nodes or running a node, there's not really a whole lot of reason to be using Link. One thing that is actually changing, though, with that is that staking is coming. And I'm sure everyone watching this video, if you're familiar with Link, you're well aware of staking coming to Link soon. And this is one of the first things that Link is really doing to try to make itself have a bigger use case with the broader investment class, right? It's not just people who are running nodes or who are, interacting with Chainlink to grab data from it, but just holders of Link can now get some benefit of doing so by helping to secure the network and then, of course, earning staking rewards. And that's coming out. The official timeline is sometime in December of this year, so sometime relatively soon. And so when we think about that then, and we're just thinking about that long-term bull case, again, the bear case, if you're going to believe the bear case for Link, you have to think that Web3 will never be worth so much that the Oracle service propping it all up would ever be reasonably worth more than $20 billion, right? And that there would be no hype cycle that could ever push it beyond that, even if that's not its true value. I personally don't think that's very likely in the long term. I think that Link is an asset that I think will stick around as long as Web3 is around. And so really a bet on Link is a bet on Web3. Now there's no guarantee that Web3 will succeed, right? It could be, it's very possible the Web3 is all just hype and all just, a bunch of buzzwords that's ultimately never going to be anything. It's not my view, something that of course we have to think about. But I just think that that's a unique thing about Link, is that the case for Link is not Link itself. It's more so a case for Web3. Whereas a lot of other assets are not so much a case for Web3. A lot of alt L1s, Web3 can succeed while that particular alt L1 fails. It's hard to see a world in which Web3 succeeds and Link doesn't benefit from that as well. So that's the first thing I wanted to call out, that Link in some ways has some special fundamental properties that a lot of other altcoins don't, which gives me a little bit more confidence in its endurance long term. Doesn't mean it's going to perform especially well for who knows how long, but I do think eventually it will probably be able to reclaim its all-time high, if not higher. Not financial advice, just my opinion on that. Okay, so with that in mind, let's now flip over to some of the indicators we have on the channel and just see what they're thinking about Link right now. So that's the long-term kind of fundamental bull thesis for Link as I see it. Let's talk about some kind of more shorter term relative to that super long-term perspective and just see where Link sits right now. So I'm showing you here the upside downside potential indicator for Link, the long-term version, the case that cares about moves that play out over months. So still long-term focused, but maybe not as long-term as that, macro fundamental thesis I was just talking about. So if you're not familiar with this indicator, it's our risk indicator, or that's the way that we like to, the easiest way of understanding it probably, risk indicator. And so higher values you get are higher risk, lower values are lower risk. And so you can see as this has done a great job overall in Link's history of identifying these high risk points, these tops and local tops, and these low risk points where acquiring Link has been advantageous. And what you'll notice is that we've coming out of a period of deep green, right? So if we look at the raw values here for Link, the long-term UDPI, so the white line is the UDPI level, the yellow line is the Link price. You can see that at the local low back here in June, we went and set in a very low reading on the long-term UDPI. The only time we'd ever been that close was all the way back here in late 2018. And really the last time we've been below -4 was at the absolute lowest price Link has ever been, back here, over here, and now again over here. Now we had come back out of that as we started to move back up, and the model, was pricing in the possibility of more downside. We've come kind of back down to that range. Long-term UDPI has come down there as well. But overall, this is a deep value zone for Link, historically speaking, right? Every time we've been below -3 has generally speaking been a pretty good time to acquire before moves back up. Now, one difference that we're in right now versus in the past is that really, except for this move in here, we were just in a bull market this whole time. So of course, in a bull market, getting down to these readings is just an obvious no-brainer. It's like, well, of course, these are good times to be buying. We're in a bull market. Movements to the upside are more likely than to the downside. And so that's just buying the dip before shooting off to the upside. It's a bit different here in a bear market, right? Where we don't know if this is the absolute bottom. And so that kind of buy the dip mentality, going all in at these readings might not be as advantageous, because it could be that lower prices will come. And certainly the model thinks that that is possible. Lower prices could come, that we could break from this range to the downside. It's just thinking that there's more upside potential that's realistic than downside. But it's something to keep in mind, right? And so that's where being at, below -3 is not nearly as much of a, go nuts now and expect just massive returns very short term like it would have been back here. We might be waiting for a while. Even if we just end up being in this range, we might have to be in this range for quite a while before more upside comes. But what it's saying is that long term, over the coming months, it thinks upside is more, there's a greater amount of upside that's realistic than there is downside. So this is, of course, ruling out any kind of macro calamity, like the bond market blowing up or the stock market absolutely crashing or something like that. We'll have to wait and see. Those are things that, are extrinsic to the crypto markets that could certainly have an effect. But if that doesn't happen, if historical trends, continue to be predictive of the future, more likely than not, I think we'll look back at this, a year, 2 years from now, and just look and say, oh man, that was the accumulation zone, right? That was the time before we go set off some moves to the upside. So not financial advice, right? I'm definitely, not saying that downside can't come from here. It certainly can. But that's just the way that I'm interpreting this, is that it would, I would expect that in the coming years, especially from that long-term fundamental thesis, that these prices will look quite attractive relative to where Link could go in the future if Web3 has the run that I think is possible. And I also want to show the short-term version of the UDPI for Link. That's this one right here. This is just more volatile. It cares about moves that play out over days to weeks, so it's more reactive to these shorter term moves. It's telling a similar story, story, right? We're down at around -3. We've gotten down to around -4 again, back over around here at around the lows. But generally speaking, still more upside potential that's realistic in the shorter term than downside. And so, it wouldn't surprise me for a Link to go on a run, especially if the broader crypto market is able to get breakout to the upside from this range that's kind of been stuck in for the last couple of months. And that could then start chewing up some of this realistic upside potential here. Now, the final thing I wanted to talk about in terms of risk for Link was just to compare it to some other crypto assets. So we have assets over here, Bitcoin, we have price here, and then these are our short-term risk levels, medium-term risk levels, long-term risk levels. It looks like my titles got chopped off there, but it's short, medium, long. And so I'm just going to call out where Link is right now. So it's sitting at -3.02 on short-term risk, -2.42 on medium-term risk. That's risk that's moves that carry out over weeks to months that this model is looking at, or this version of the model is looking at. And then -3.29 is the long-term. That's what we were just looking at over here. And we can compare that to the other assets in the crypto space. We can see that it's not bad, right? It's sitting kind of more or less in the middle. There's some that are quite a bit higher, Quant being a notable exception here. But then other ones that are kind of in the -1-ish range, -2-ish range. Link is sitting in a pretty decent spot, and that's notable because it wasn't there just not too long ago, right? If we look at the short-term UDPI, around the last time I gave an update, we're up in kind of the -1, even above 0 kind of range, both on the short-term. Then the medium or the long term, we're up at around -2. We've cooled off notably across time frames since then. And so, if we do get a breakout to the upside, this could be a great time to ride some of that volatility. That's, of course, assuming the breakout comes to the upside. We don't know that. It could be breakdown to the downside, which brings it even lower. But that's just what I'm seeing with this, that especially with the short-term UDPI, if we get a breakout to the upside in the crypto space, I would expect us to be able to chew up a good amount of that short-term upside potential. So again, not financial advice, just what I'm kind of seeing in this. And then the other thing that we can look at also, which might point to a change in momentum for Chainlink, is the momentum bias indicator. So this is the MBI. What it does is it quantifies momentum, and especially when momentum is biased to the upside, so price really shoots to the upside, any short-term drawdown quickly gets bought up and pushed to the upside, versus downward bias, momentum bias, which is below 0 in the red here, which tends to really dominate in bear markets where we are right now, which really pulls price down, rallies, get sold quickly, and you just keep moving back down. So what I've talked about with bear markets forever with the MBI is that the telltale sign you're in a bear market is this behavior, exactly what we've been seeing with the Link, where you're getting into deep red, you're trying to reestablish positive momentum bias, and you get rejected. You try again, you get rejected. Just this drawdown, this deep red nastiness that we've been in. Whereas bull markets are this where you're spending a lot more time in the green than in the red. Now, one of the things I think is really interesting about the Link MBI historical chart is let's just take a look at how it's behaved, right? So we can see that when we're in this bull market here, especially when we got to the melt your face part of it, going up from here in 2020, really after the March crash, going off to ultimately the all-time high, is that what ended up happening was that you're kind of setting in higher highs, higher lows on the MBI chart, kind of all the way through this. And then, you were spending a lot more time in the green. And then that broke, going into the summer of 2021, and it's never really been able to change. And then we've been seeing this massive bearish move on the MBI, really actually ever since the summer of 2020, right? That's when we're actually at the highest rating of the MBI. And then even going into the all-time high, we actually saw some bearish divergence, price going up, momentum kind of coming down. And what's notable is that this trend line from the tops has gone all the way through until here. We actually broke through it, right? We were setting in lower highs on the MBI going all the way through here until here. Then more or less setting in lower lows on the MBI, not really quite, but here, through here, that also has broken. And so far we have not set in a lower low. So what that might mean is that we're seeing a reversal in momentum. So this can happen where you see these trend lines on bottoms, trend lines on tops. When they break, like what we saw here, higher low, higher low, higher low, broke down, then we started going to this bear market. Maybe we're going to see a similar thing going the opposite direction here. We're seeing higher low, higher low, higher low, all the way down through here. Then suddenly we broke through, set in a higher low here than we had back here. And now we've not set in a lower low from where we were down here. And what that could point to is an extended period of consolidation. And I've noted this before with other assets. When you start seeing this oscillation around zero, right, where we're not seeing too extremely deep values for too long before going back to the other side, kind of what we're seeing here, right? Going up, oscillating up, down here, down here. If we start seeing that oscillation around zero behavior, that could be a sign that we're entering into that transition between a bear market and then a coming bull market. Because we've seen that with Bitcoin, we've seen that with Ethereum, we're seeing that, we've seen that with Link, we've seen that with a whole host of different assets with the MBI, that when you start going from this transition between this obvious bear market behavior into that oscillation around zero, that can be that sign of shifting in momentum, that instead of having a super dominant positive momentum bias or a super dominant negative momentum bias, you're just kind of getting an average move. You're just generally kind of chilling out. And that often comes before those big moves back to the upside. So again, that's assuming we don't get any crazy external shocks to broader macro markets that just throws us all out the window. But if that doesn't happen, and if history is any guide, if we don't see this fall off a cliff and set a new low here, if we just start oscillating around zero, that could actually be a very bullish sign, even though the price action might look extremely boring, just stuck in this range like we are right now. So something to keep an eye on for sure, something I'll be updating on as well. So just to kind of wrap us up then with Link, this has been kind of a longer video, but I think some interesting things to think about with Link, that the long-term macro thesis is not broken by any means. Link is still the lifeblood of Web3 to some degree in terms of being able to bring in outside data, which is essential for a lot of crypto projects. They need to know, for example, about price data from other areas. And then there's a whole host of other dApps that need outside information for one reason or another. Link is the thing that's providing that way far and beyond above any other Oracle protocols. And so the long-term thesis is very much intact. And then short-term, we're seeing some possible signs of relative strength and a change in the tide. And if that happens, Link is sitting in a place where it has a ton of upside potential that is possible. So I'm not calling for a rally, right? I'm not calling for a melt your face off rally for Link. I have no idea. We could go and set in a new leg to the downside. It's absolutely possible. But I think we should be vigilant that while Link is the most boring right now that it's been in a while, just going sideways, in some ways this is the time, in my opinion, that's most important to pay attention. If we do see clear signs of a break to the upside, we know that Link has a lot of upside potential that it could go on and realize. So it's something to keep an eye on. I think the break of this range in one way or the other is going to be really, really important. And if it's a break to the upside, the last thing we want to be is those people who are just FOMOing in, having missed it because they weren't paying attention. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.